Now we cross to Singapore for the latest from our Arise Asia business correspondent, Sandy Huang. Hi, Sandy. So let's start with Asian market movements. Who are the movers and shakers in the region today?
Well, yes, certainly most Southeast Asian stocks were up, with Singapore leading gains. The amended Brexit deal boosted investors' appetite for riskier assets here. Singapore's STI jumping about 1% earlier, with financials and industrial stocks reaping strong gains. Local banks UOB and DBS both gained around 1%. Looking down under, Australian shares reversed course and edged lower. Gains in mining and energy stocks were offset by losses in financials at the end of the session due to political scrutiny. Financials saw a turnaround in the last hour of trade, with the index closing down 0.4%. And Japan's Nikkei closed the day up 1.8%, surging to a 6-day high. That's thanks to a tech-led rally on Wall Street and gains in financial Asian markets and extended falls in the yen that lifted exporters. Chip equipment makers Tokyo Electron and TDK were among the biggest winners. In China, stocks ended higher on hopes of a U.S.-China trade deal. Sentiments were also lifted by expectations of more stimulus policies to cushion the downturn. The Shanghai Composite ended up 1.1%, and Hong Kong's Hang Seng ended up 1.5%.
Well, Singapore today has joined a growing list of countries grounding the Boeing 737 MAX 8 fleet after the recent fatal crashes. How do you think this will impact travelers and investors, Sandy?
Yes, unfortunately, the number of nations taking the plane out of service continued to rise overnight. Singapore is suspending the operation of all variation of the Boeing 737 MAX aircraft. This will affect Singapore Airlines' regional arm, Silk Air, which has 6 of the jets in its fleet. The decision follows 2 fatal accidents involving the aircraft in less than 5 months. The latest on Sunday, as you know, when an Ethiopian Airlines crash killed 157 people. The Civil Aviation Authority of Singapore now says it will gather more information and review the safety risk associated with this Boeing aircraft. Just yesterday, China decided to stop domestic airlines from flying the aircraft as well, which affects more than a dozen carriers and almost 100 planes. Indonesia soon followed suit. Now, it's still unclear whether the Lion Air crash in Indonesia that killed 189 people was related to the latest incident, but a blanket grounding of the jet is certainly bad news for Boeing. The 737 MAX generates almost a third of the company's operating profit, and investors are rightly nervous. Boeing shares tumbled more than 5% overnight. For countries like Singapore, for now, the suspension will no doubt impact flight schedules, and the airlines have said that customers will be contacted for reaccommodation.
Well, Sandy, meanwhile, there's gloomy forecasts for traffic growth in the air cargo market, according to fresh data from IATA. What's contributing to the negative outlook?
Yes, that's right. Today, the International Air Transport Association, or IATA, nearly halved its annual forecast for air cargo traffic growth to just 2%. The main reason for this cut are trade frictions, Brexit, and anti-globalization rhetoric. Global air freight traffic fell 1.8% last month, marking the worst monthly performance in 3 years. The stakes are especially high for Asian airlines. They account for nearly 40% of the global market because the region is a manufacturing and e-commerce hub. Air cargo demand in Asia fell by 3.6% last month. Weaker manufacturing conditions for exporters, ongoing trade tensions, and a slowing of the Chinese economy have pushed down overall cargo demand. Now, for example, Cathay Pacific, Air China, and Singapore Airlines are among the world's top 10 cargo airlines. All 3 reported falling demand for international cargo. This means the airlines will be more dependent on passenger revenues for growth. And with the grounding of the Boeing fleets and safety concerns, it does seem that some of these airlines will be heading towards some turbulence.
Well, also facing turbulence is China's telecom giant Huawei. I know I ask about this every single day when we speak. But Sandy, the U.S. has now warned Germany not to use Huawei technology. This is just after a retaliatory lawsuit. What exactly is the U.S. saying?
Yes, the United States has told Germany that they will share less intelligence with the security agencies if the country's wireless network uses Huawei technologies to upgrade to 5G. It's the first explicit U.S. warning to Germany on the consequences for not shunning Huawei. The Wall Street Journal reported that U.S. Ambassador to Germany, Richard Grenell, issued the warning in a letter. It said that Chinese companies can be required to support China's security agencies and that the inspections of Huawei software could not ensure that there were no vulnerabilities. Now, Germany's economy minister said last week that Germany did not want to ban Huawei, but said that Berlin will change the law to ensure that all components used in the 5G networks will be secure. China and Huawei have, of course, vigorously pushed back on the U.S. allegations, and the telecoms giant has filed suit against the U.S. Analysts and industry executives have said, though, that Huawei has already built up such a strong lead in 5G technology that it's practically irreplaceable for many wireless carriers. So the battle continues as Beijing and Washington are still trying to resolve their wider trade friction.
Wow, well, we'll be keeping a close eye out for how that unfolds. Now, Sandy, before I let you go, some potentially good news for Chinese consumers. Now, the country's largest fast food operator, Yum China, is opening new outlets across gas stations. This is something I'm praying we'll do more of in Nigeria. What can you tell us about this new tie-up?
Yes, exactly. Well, Yum China Holdings is teaming up with Sinopec and China National Petroleum Corporation to open more than 100 franchise restaurants at their gas stations in China. The partnership aims to open the franchise stores over the next 3 years. Now, Sinopec and CNPC collectively operate over 50,000 gas stations in the country. It didn't disclose the financial details of the tie-up, but Yum China expects these partnerships to expand their portfolio and reach a potentially a previously underserved segment of the market. But the firm cautioned, though, that its restaurant margin would come under pressure in the first half due to rising poultry prices and ongoing value promotions. But it's still confident that it will return $1.5 billion to shareholders over the next 3 years. The New York-listed firm is a spin-off from Yum Brands and owns Pizza Hut, KFC, and Taco Bell in China, and has more than 8,400 outlets in over 1,200 cities across the country. Yum China reported a 6% year-on-year rise in total system sales for the fourth quarter, and it plans to expand its restaurant portfolio to 10,000 by 2021. So pretty exciting time for this fast food operator.
Exciting times indeed, Sandy. Thanks so much for joining us today on the show. Arise Asia Business correspondent there, Sandy Huang.